You're watching Tracking Trends. I am Ajay Sharma. This is a special telecast, and that is because the Indian PSUs have seen a massive amount of return in the listed universe over the last few quarters. Sections in the market believe that the rally could actually last longer even from current levels. Well, there's another section that believes that this rally has overstayed its welcome. So this is a special show so that we can give you a 360-degree view by fund managers, top ministers who joined us recently, and also corporate voices representing some of these top-performing PSUs to help you so that you can decide better whether to participate in the PSU transformation, how exactly to go about it, or whether it is getting a bit risky. The guest on the show is a veteran fund manager, Anshul Saigal, specialist in the mid-cap, small-cap side, but has been around 20 years plus and now on his own, former Kotak guy. Anshul, thanks very much for your time. So we are analyzing the case for the PSU ReRating here. We can't really discuss enough of it. There is a lot of interest by almost every shape and size of investor we speak with. At the same time, there's equal measure of skepticism. There's one camp which believes that this ReRating is actually justified. Not only justified, they say that there are structural efficiencies which are coming inside now, and this PE ReRating is actually on the back of fundamentals. The other camp believes that it's just PE ReRating right now, and there's a low float angle to it. The earnings are actually yet to catch up. What do you make of this argument at the current juncture, Anshul?
Thanks, Ajay, for having me. I think that truth lies somewhere in between. There is definitely a PE ReRating which has happened, but it is not in thin air. Earnings have grown quite handsomely for some of these companies, and that is getting reflected in valuations today. Let me give you an example. The most wanted sector just now is railways, right? In 2019, one railways company, which is really an arm of the Ministry of Railways, RVNL, this company had EPS of 4 rupees for a stock price of 20 rupees, which means it was trading at 5 times earnings. And if you looked at the 5-year return on equity profile of this company, it was roughly in the range of 18%. So a high ROE, high earnings company traded at 5 times earnings. And to top it all, it gave a 2 rupees dividend also in that year, somewhere close to 2 rupees, which meant that it had a 10% dividend yield. Now, the company had nearly 7 years of order book already built into the numbers, which means that it had 10,000 crore of revenues and order book of roughly about 70,000 crores. And fast forward 5 years or 4 years, between 2019 to 2023, revenues are up from 10,000 crore to 20,000 crore. EBITDA is up from somewhere close to 500 crore to 1,200 crore. And of course, the stock is up from 20 rupees to 250 rupees. So while there has been a ReRating, but it is on the back of earnings growth for this company, which has led to the market looking at the business in a very different light. And of course, there is focus on this space today, which is leading to a serious ReRating in the space. I can tell you that this space, the PSU space, particularly on the PSU banking side, was the trade of the century. If you allow me, I'll give 2 minutes lowdown on that space. The PSU banking space, for the better part of the last decade, had witnessed NPAs inflating. And so NPAs in that segment went up to as high as 10% for some of the leading PSU banks. As a result, you witnessed growth in that space coming off. And that led to many of the banks trading at 0.2, 0.3 times price to book. Now, fast forward to 2020, 2021, and the NPA cycle had peaked because the government was on a cleanliness drive. NPAs had peaked at 9-10%. Companies had shored up capital, and earnings were at rock bottom, as also valuations were at rock bottom. Now, when NPAs were bound to come down, it was quite clear that with capital on hand, these banks will go out and grow. And if you compare them to private sector banks, those banks were trading at 3-4 times price to book. Now here is 0.2, 0.3 price to book, earnings coming in on a heady way, and valuations were really rock bottom. There was only one way for these banks to go, and that was up. We've seen, for instance, even an SBI last year do an all-time high profitability of 50,000 crore profits. That tells you that something was changing on the ground, which led to the PE re-rating. So those who believe that this PE re-rating has happened in thin air are not really seeing the whole picture.
Excellent point. We'll come back to that. We'll scratch this point a little more in moments from now, Anshul. Soumit, my colleague from research, is also joining us. He's got two pieces of research which he's culled out. One who believes, from one of the very noted brokerages in the street, that there is a strong bull case in select PSUs even from here on. The other piece of research she has pulled out, which talks about that there is just greed in PSUs and they are in bubble-like territory and stuff like that. And Soumit, talk to us about both the arguments which the parts of street talking about.
Well, like you see, there are two sides to every coin. There are two sides to this PSU rally as well. And both these notes have come in from renowned domestic and foreign brokerages. The first one is from the foreign brokerages, and that is on the bull side of the PSUs. And they are saying that the PSU re-rating has more legs to come going forward. Now, the outperformance that we have seen in PSUs over the last 12 months has come after an underperformance, after a very long underperformance prior to 2020. Now, they are also saying that the recent outperformance is largely on the back of the improvement that we have seen when it comes to return on equity, and also because of large EPS upgrades that we have seen. Now, previously, the return on equity of the PSU companies had fallen from 14 to 15% level to around 4 to 6% level, and this was primarily due to a drag coming in from the PSU banks. However, that has changed, and now again the PSU return on equities have moved back to 12-13% level, and profitability has also improved, which has led to many EPS upgrades for largely all the PSUs that are in focus. Now, they're saying that the index continues to trade at a discount of nearly 40% to the Indian benchmark index, that is Nifty 50, which offers a 15% average re-rating that could still happen if you want the discounting level to be at the normal averages that we had seen earlier. They're also saying that the change of the stance from the government side towards value maximization of PSUs is also one of the reasons which has led to this re-rating and could also lead to this re-rating even going forward. Now, they also have top 3 picks from the PSU space, and that is SBI, Coal India and NTPC, and these are all Jeffrey's top PSU picks. The second side is from the Kotak note, and they are saying that they find it hard to subscribe to the market's new narrative of the PSUs. Now, they are saying that as per themselves, market is overly focused on the near-term profitability of these PSU companies and are clearly ignoring the long-term risks that are there, and which is on profitability side. Secondly, they are also seeing some business model changes, and also there is this disruption risk that is always prevalent in the market, and especially for PSUs going forward. Now, for capital goods specifically, they are saying that capital goods PSU may not enjoy the high profitability till perpetuity. They are saying that electric utility PSUs are at a risk of weakening return on equity profile going forward. And when it comes to the oil marketing companies, they are specifically saying that there is a their marketing margin and their profitability is highly volatile, and this could also fall going forward because of elections and because of increase in crude oil prices. So these are all the bear factors that Kotak has pointed out when it comes to PSUs.
Interesting. Soumit, thanks very much for that. The other thing which comes to fore, in fact, let's pose the big questions which we are analyzing and chiseling out so that you can take better decisions as far as PSU investing is concerned. Are there more legs to the PSU re-rating, which is happening for last several quarters? We're also talking about government's value maximization drive, which is in fact extracting more efficiencies, which will translate into better profitability for these PSUs. Is the PSU re-rating actually over? Is it time to book profits? Or should you keep your money running even PSUs, even from here on? Infra Phillip, Make in India push. What are the next few triggers for this entire PSU re-rating phenomena which we are talking about? So should you be riding the PSU rally even from here on is the point we are analyzing. Before we take a break, I'd like to discuss an angle with Anshul. Anshul, my colleague Somit was talking about few sectors where the gains have been predominantly higher. But it's like, just for example, there may be a stock from a utility renewable kind of a stock just got listed, which may have gone up 5-6 times from the issue price in a short period of time. It may have factored in a lot of positives going forward, but that doesn't make it a bad investment if the horizon is 5 years. Similarly, there could be areas where indeed, for example, defense, maybe the stocks are for factoring in order book gains which are lopsided 4-5 years far out. It all depends on the horizon of the of the investor, and also don't forget that this government, the probability of coming back and the efficiency extraction drive, which are the typical reason why these PSUs are re-rating, may very well continue. So booking out and then what? You should have a better investment idea to put that money in, isn't it? Is that all a dilemma investors face sometimes?
Yes, Ajay, I couldn't agree with you more. In fact, the points that Somit made, I think that both points may be true. That there are expensive pockets in PSUs, and there are cheap pockets also in PSUs. Let's look at the example that I gave you of the railway stock. Now, that trades today at somewhere close to 25 times price to earnings. But then let's look at the PSU banking space, right? In PSU banking space, X of SBI, that space trades at 1.2 times price to book on a forward basis, that is FY25 basis. And if you compare the metrics of this space, say ROEs in the range of 16% and earnings growth in the range of 14 to 15% for the next 2 years, compare that to private sector banks, you will notice that ROEs of private sector banks are also in that range of about 16%, and earnings growth over there is also in the range of 13 to 14%. However, the price to book multiples are 2.2 times and higher for private sector banks. So 2x the multiple for similar metrics on earnings growth. Now, can that gap get bridged when PSU banks are trading at 4-5 times price to earnings even today, or even, some of the other banks are trading between 5 and 10 times. I don't see that there cannot be upside in these banks from here as well. But however, there are certain pockets where upsides are more or less captured, at least in the short term. Your point about the long term is very well appreciated. You wait 5 years, it's very unlikely that even from these levels, you will not make money in PSUs. But in the near term, that may be a slight bit of an issue, because these, after moving so much, these stocks get consolidated. So both points are valid. Certain pockets are expensive, other pockets are cheap. And the government is doing everything in its power to ensure that the efficiency of operation of PSUs gets enhanced. And that will also get reflected in valuations over a period of time. So overall, it's not as bad as it used to be, say, 3-4 years back.
Right. Anshul, stay on with us. We'll take a short break. But before that, as our viewers and you may all know, we spoke with a bunch of the brightest policymakers just earlier in the week in the form of from the sidelines of ET Now GBS. So let's get you a view from some of the ministers who are actually working tirelessly behind the scenes to ensure that the PSU pack actually improves the efficiency. We'll play those slices of conversation and then we'll get you. All right, this is Tracking Trends, and this is a special edition where we are analyzing what's happening in the Indian PSUs. Will the re-rating continue, or is it time to book profits? Which are the inexpensive areas of the PSU universe, and where exactly has the good news partly getting discounted? Now we move to the query sections where our viewers actually write to us, and Mr. Sanjeev Bhasin is helping our viewers to decide what to do in these stocks. Bhasin Saab, very good afternoon. You have participated in the re-rating of PSUs very well, along with our viewers who you have been guiding. This is a question which is coming from a viewer, and he's got a lot of different PSU stocks. This viewer of ours has bought PNB 20,000 shares of PNB at 52. 26,000 Anil Kumar Bhalla, okay, from Jalandhar. Almost 26,000 in HPC. 10,000 in MDC at 122. I wonder, must be a big HNI. But anyway, what will you advise them at current levels? He wants to whether hold or add more, getting bullish on PSUs. What would you advise him?
Yeah, good afternoon. Ajay, so HNI or no HNI, he has become an HNI because of the sheer value creation of PSUs. So even a reasonable investor is now become an HNI because the value of the PSUs has gone up 3 to 4 times. So I would say that these three are very good, but two PSUs which I think are really good bargains at this time. First is IRCTC, which has 85% of its EBITDA on ticketing, and now with Vande Bharat, I think IRCTC is going to be laughing his way to the bank. 36% is the EBITDA on the NEER, which it has a 82% market share, and 16% on the catering. And you are aware how Vande Bharat and the trains and how the even lower middle class is now traveling by that. So I think IRCTC is a no-brainer. It should be, according to me, the next big PSU to make a move. And second would be Concor. I think Concor has done nothing. It is the monopoly on containers, and as the rakes get more in supply, their business will improve. So congratulations to the investor. Stay put with the three he has, and if you want to diversify, then get into Concor and IRCTC.
That's the answer from Bhasin Saab to Bhalla Saab from Jalandhar. Okay, let's go to Ghaziabad now. All your neighborhood, Bhasin Saab. The next one is Rakesh from Ghaziabad. He wants to ask, he has 1,000 shares of RVNL and 5,000 Tata Steel. Tata Steel not really a PSU, but RVNL is. What would you advise him? Whether she should be looking long term, looking out, or add?
I think on RVLN, he can take some profits and get into IRCTC, like I said, or a Concor. There is more value there. The dividend plays better. But yes, RVNL has been a huge wealth creator. On Tata Steel, I am very bullish on the commodity cycle. And I think stay put with Tata Steel. And if you can, please add Vedanta. Vedanta is our dark horse now, where, as you are aware, they are reducing their debt by selling some stake to GQG and Rajiv Jain. And I think Vedanta has a sum part of all the commodity plays in one basket. You cannot get such a company in the entire world. I think Vedanta is the most undervalued stock, and it would be very good if with Tata Steel he can add Vedanta, and in RVL he can add IRCTC.
Sanjeev sir, your fans are not only from India but abroad also. The next query is actually coming from Qatar. Najib is writing to us. He holds 10,000 shares of IRFC and wants to know if anything is happening over the next 3 months. Any action expected here or beyond?
So you are aware that rail financing is one of the key prospects, and as you've seen, REC, PFCO and IRED do well. IRFC is also part of that. It has been a proxy to the growth, and cost of funds have been reasonable because of the bond. So I think IRFC is also here to stay. But like I said, please diversify into IRCTC, into Concor, improve your quality of stocks, make it a little 3-4 stocks so that you have more eggs in your basket.
Thanks very much for helping our viewers take stock of what to do with their PSU stocks in their portfolios. With that, it's a wrap on this edition of Tracking Trends. Thanks very much for watching. Closing trades will take the action forward.